Welcome to Bears in Exile. Today is August 31st, and it is time for the market overview, looking at the Dow, SPX, VIX, XOY, TNA, UUP, FXE, GLD, and SLV, which actually may be changing slightly in the near future. But anyways, that's for another day. But here we are with the Dow. It was all over the place today, ending up with an inverse hammer, which was preceded by a hammer. So two reversal candles in a row as we are entering the bearish bar. Well, we have one big warning sign today, or something to be aware of, which is we had talked about the short-term moving averages. We have not gotten complete crossover and separation prior to entering the bar. This is not good. This is a definite warning sign. And atypically, you put the heart on the bar if you have complete crossover and separation prior to the moving averages entering it, which normally produces a closing candle second to the top moving average. Well, since we're not going to have that, the odds of that happening are diminished. It's not to say that it can't happen, but certainly we like it when odds are in our favor. So what do we have besides the promise of QE3 coming, courtesy of Uncle Ben? Well, we have the CCI, overbought, very high. We have the fast and slow stochastics, overbought. We have the 14-day RSI moving average, very important, finally getting out of oversold. We have the RSI clicking down, we have the histogram and the MACD clicking up. So, what can we tell from all of this? Well, what I think is going to happen, and I could be wrong, you have the stochastics up here. It would be completely normal for them to turn around and go down while the 14-day RSI moving average is still doing its climb. What would happen then? Well, you would get a minor move down, which is would be consolidation or whatever, and then it would reach whatever bottom it's going to find, turn around and go up and join the 14-day RSI moving average on its trek up to the top, at which time you would have a really good move. And this is completely normal. I mean, here you have it low, it starts its climb, it takes forever for that to happen. In that time, you have the stochastics go up, you have them come back down, you have them go back up. Notice, once it gets above the oversold area, this area right here, as long as the short and long-term stochastics are moving along with it, that's where you get your good move. Conversely, you have it in overbought, it starts to leave it, the stochastics go down. Notice they're going in the same direction together, and you get a big move. Now, this is not typical, so just because it's going to go up together at some point doesn't mean it's going to go 1,500 points or something like that. But anyways, that's the idea. They'll go up here, they'll turn around, go back down, join it, and they'll both climb together, and it'll be a little bit higher at that point. 14-day RSI moving average does not turn on a dime, and so these going down, it's not going to put the hurt on the RSI moving average. Anyways, that is my theory, that is my thinking, and that would play nicely with the inverse hammer here. But if it wants to keep going up, hey, no problem. And Benny is printing it up, so it would make sense as well. So I have no problem with that. Now, 60 minutes. We're going to keep looking for our divergences. We had it was up a little bit today, 50 points or whatever. What do we have in the secondaries divergence-wise? Well, we still... no. We're done with the CCI divergence. That was destroyed today. We still do not have one in the stochastics. Actually, we have very minor ones. They kind of overlap, so they're hard to see. But they're nothing to write home about yet. But these are sloping down, and the price is going up. So, yeah, very minor in the stochastic. We still have one in the RSI, going back a good clip. And we still have the MACD histogram divergence, and it is actually getting stronger. So, something to be aware of. SPX is going to be more of the same thing, so I won't rehash it too much. All of the secondaries, of course, are identical. The inverse hammer is actually better formed on the SPX, and like the Dow, of course, the short-term moving averages have not had complete crossover and separation prior to entering the bar. A warning sign that there could be an issue here. Going on to the VIX, we have a spinning top. And notice also, we are about to enter, the short-term moving averages are about to enter the bullish bar. We do not have complete crossover and separation prior to going into the bullish bar. Therefore, the odds of it putting the hurt on the bar are less, much less. So we will see secondaries, CCI clicking down, the very important 14-day RSI moving average getting out from overbought area and sloping down. Notice the stochastics, both of them in oversold area. For these to turn around and go up while the 14-day RSI moving average is sloping down is completely normal. All it will do is put a pause or a slight move up before the overall movement continues on its way, most likely in force. Completely makes sense. RSI clicking up, trying to get to the 50 neutral, histogram and MACD clicking down. Divergences in the 60-minute time frame. Do we have any? Yes, we do. We have very minor in the RSI. We have some in the fast stochastic. We have some in the slow stochastic. These are minor. These are only about 2 days into themselves, so don't read too much into the stochastic one. However, the MACD histogram one, the best one, is definitely has a divergence. XOI, inverse, the tail could be a little bit bigger. Almost an inverse hammer, same meaning though. Look at the short-term moving averages. We do have the middle Bollinger Band below these, so it does have that going for it, but certainly did not develop nearly enough prior to entering the bar as we would like. Secondaries identical to the Dow and the SPX, with the exception of the 14-day RSI moving average not getting out of oversold territory yet, and the slow stochastic not yet getting too overbought yet. So not quite developed as the Dow and the SPX. Going on, TNA, spinning top. We hate spinning tops. CCI very high, both stochastics overbought. This is crazy. The 14-day RSI moving average is still an oversold. We've been talking the last couple of weeks about the stinking TNA not leading, not following correctly, just languishing, just being a bump on a log, and it's very irritating. But notice we don't even have as much development in the short-term moving averages trying to cross over for a test of the bar. It's not even at the right angle for really penetrating it. Terrible. We still have the bullish cross on the MACD. We still have that tick on the MACD histogram, down tick on the RSI. Very disappointing with TNA these past couple of weeks. It used to be very reliable as something that would swing all over the place, and it was beautiful, and just not doing that. We have, let's see here. We do have divergence in the CCI. We do have divergence in the slow stochastic. We do have divergence in the fast stochastic. We do have divergence in the RSI. We do have divergence in the MACD histogram. Ugh. All kinds of divergences for TNA. You know, all of that lagging, and it still is the most messed up in the 60-minute time frame. It's very, very disappointing. Going on to UUP, the dollar, we have a bullish bullish engulfing of the spinning top from yesterday. And, we were talking about possible need for it to jump back up when we had our uptick, which was resolved intraday yesterday, by the way, which I think that we mentioned. But we had also mentioned that I'm trying to remember everything. Anyways, off the top of my head, I can't remember everything that was said about UUP last night. Regardless, bullish engulfing is still, even with this bullish engulfing, it is short-term moving averages are still sloping down. Beyond that, CCI ticking up, along with the stochastic, along with the 14-day RSI moving average, along with the RSI, along with the MACD, along with the histogram. So, is this going to go up for a bar retest? It certainly isn't very far away, and if everything's pointing up, hey, why not? I still feel that the overall trend for the dollar is down, but if it wants to swing up a little bit, that's completely fine. Do I think that it is going to have enough momentum to break through the bearish bar and emerge the other side and run up to the top of the chart? No. But notice also that we are getting the middle Bollinger Band crossing through the short-term moving averages, looking to get underneath it and help push it up. So it does have that in its favor. FXE. All right. Well, we had talked the other day about top, lower top, lower top, lower top, lower top, and it finally broke one of the lower tops. Well, now it has gone back down. It's almost touched the virtually non-existent bullish bar, and the middle Bollinger Band is looking to cross through the short-term moving averages and get above them. Well, CCI ticking down, stochastics ticking down, 14-day RSI moving average being neutral, RSI ticking down, MACD ticking down, MACD histogram ticking down. Well, I don't know what to think of this personally. Certainly there's not much of a bar to stop it if it decides to decline. I'm going to have to wait and see. There just is not enough, we talked about this sine wave in the past, how it goes up and down and up and down, and it gets smaller and smaller and smaller, and here we are in this little jumble mess thing. Certainly the short-term moving averages are still above the bar and everything, but, we're going to have to wait and see. GLD. Okay, we have a little star on GLD, centrally neutral, signaling indecision. Still have a full bullish bar, very strong. Notice the middle Bollinger Band right in the middle, as it is trying to figure out if it wants to be on top of it or on bottom of it, which completely makes sense with an indecision little star. CCI ticking down, stochastics both ticking up, our RSI 14-day moving average ticking down, still in the overbought area. RSI itself swinging back up. We have a slight downtick. I believe that's a downtick. Yes, it is. Downtick on the MACD histogram and a downtick on the MACD. It is a mixed bag, as gold is still pretty high, but people have not figured out whether or not they need to be worried or not worried. And if QE3 is coming, gold should go up, because the dollar is going to be worthless. But and if the market tanks, then gold should go up because gold is safety. So I'm not really worried about gold at this point, but once again we'll have to see indecision candle. However, all of the short-term moving averages still sloping up, so I'm going with those. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.